Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's update our view on the euro currency. So, as you can see, recently it was rather dramatic action, mostly on the intraday charts. On the daily, although we see some points that suggest possible downward action, some downward continuation, but the overall bullish context still valid. And it is not as dramatic for a daily chart as on intraday charts. This is one of the reasons why we said recently that we are not considering taking any positions. I mean, the downside inside of the consolidation that we have, because we are mostly watching for support areas where we could consider taking the long position on the daily. And when you are coming to important events such as the ADP report, tomorrow we will get the Bank of England meeting. Maybe it will be some indirect impact on the euro currency, but still it could be some impact, at least on the Great British pound. It definitely will be some volatility. Finally, we are coming to the non-farm payrolls release. And recently you just could see what has happened. So in the first point, when the ADP report been released, it was, according to the technical picture, the market jumped because ADP report was 2 times lower than it was suggested. But a few minutes after that, the Fed made the statement. The vice chairman of the Fed and some other representatives tell that mostly with evidence, without any hints, that they are considering tapering starting late in this year, and the first rate change should come in the beginning of 2023. That was a clear statement, and this of course has changed the sentiment, and as a result of this external impact, the market has dropped. So although this event makes no big difference to the daily chart, on the intraday charts, that was rather significant action. So first, what we have on the daily. On the daily, now we have the breakout of the pennant here, as you can see, in the opposite direction. And we have the bearish reversal candle. So market creates the new top and close below the lows. Actually, not only with this candle, but in fact the whole week, this market shows this downward action. This type of action suggests that we probably should get another downside continuation. But again, guys, who knows? Tomorrow and in 2 days we will have the non-farm payrolls. If it will be super positive, the situation again could change. Although currently it's very difficult to suggest very positive numbers because ADP has a significant correlation with the non-farm, and if it was 2 times lower, then non-farm probably also hardly will be super positive. So anyway, we will see what will happen, but currently trend stands bullish. With the downward action, market will come to the MACD line, where it could start flirting with it around some support area. And if, for instance, we will get on the daily chart the grabber, this could be the signal for a chance to go long, at least to make attempt to go long, because here we could get some harmony with this downside action. It could be some kind of maybe, I don't know, something like the reverse head and shoulders or something of that sort. So that's what we could keep an eye on the daily chart. On the intraday charts, as you could see, now we have to adjust the ABCD pattern. It's because here's a new top has been formed, here's the new low, and market right now stands at the OP. Personally, currently, I do not consider taking long position at the OP, mostly because of the strong sell-off that has followed. In fact, we have here a huge bearish engulfing pattern. It's also a reversal candle, the same as on the daily chart. And as you can see how really dramatic markets are. So yesterday we just talked that it will be great if we will get numbers market at the OP to get the chance to take the long position. And now we do not want to buy here. So we prefer to wait for deeper action. So it seems that we could consider an area between the XOP and 618 support, downward action, because engulfing usually leads to continuation, especially when engulfing is a reversal candle, and maybe after some pullback we could get some deep retracement right here. So after the strong sell-off, well, it's not very comfortable to buy immediately. On the hourly chart, currently we do not see something really special. So initially our 3 drive worked really nice. Then we've got the ADP report, as you can see, this jump up. And then we've got the Fed statement. This was drop here. Currently, for a daily trade, there's nothing to do again. So we were just watching for support areas to consider long entry. For scalp traders, since we have the great large bearish pattern, you could keep an eye on some minor pullback maybe. Most logical, it will be somewhere around 1855, 1857. And just you could see natural support resistance area stands here and here again. This will be support, and now it will be the resistance. So it's approximately 30%, 50% retracement of the whole downward direction. But if this starts to work as usual, then we should get some kind of the ABCD pattern to the downside probably. And maybe we will get market around the 618 support. Maybe even XOP will be touched. So something of that sort. That's actually what we have currently on your accounts, so let's keep watching. And again, as a bottom line, for daily traders, we do nothing and just wait for a lower standing level to consider long entry, especially if we'll get the bullish grabber on the daily chart. For scalp traders, here we're not considering taking long position by far. And keep watching for a possible retracement. Maybe it will be another Gartley triple to sell here. That could be great. And this could be some downward continuation based on the recent sell-off and based on the statement of the Fed. So that is just showing how tricky the trading process when you have multiple fundamental events, especially those of them that you are not waiting for. So the recent statement from the Fed was some extraordinary moment, surprise, and well, difficult to say whether it was positive or not, depending on position that you had before the announcement has happened. So now let's keep watching for Bank of England today and start preparation to the non-farm payroll release tomorrow.